Start with the attention grabber, right? I'm going to talk a lot about in this presentation about actual trading, right? So let's make a distinction. What is gambling and what is speculation? Gambling is taking risk when you don't know that the odds are against, so when you know the odds are against you, casinos, or you don't know what the odds are. This is general reckless behavior or reckless trading. What is speculation? Speculation is taking risk when the odds are in your favor, good poker playing, or when you perceive the odds are in your favor, which is good trading. For me, the charts is how I put the odds in my favor. The second quote, imagine poker, but there's no ante. You can just wait until you get dealt pocket aces and then bet big. That's literally good trading. I am waiting to be dealt the pocket aces or use the chart to think where I may get dealt pocket aces, to anticipate where big moves may happen. So, how did I get here? Oh, I'll go first. The last time I was on this stage was 2018. I presented on volume analysis and how to use volume to predict where blocks are trading. It's a great privilege to be asked back to the stage again to present on a completely different topic. How did I get here? I worked for UBS for 20 years in London, Hong Kong, Mumbai, traded global markets. I built a $2 billion block trading business for them, executed multiple $100 million blocks, and then I worked as head of trading for Credit Suisse in India, built and trained what I like to think was an elite trading team, ran a multi-billion dollar turnover desk, and managed numerous relationships with long-onlys and hedge funds. But for me, it always came back to charts. From the very first week that I had a Bloomberg terminal, my instinct was that there was a gold mine sitting on the screen right in front of me, and if I could understand these squiggly lines, that would be a very interesting thing to be able to read. This started a journey to learn about how markets really worked, because contrary to what most people think, in banking, you learn about how to talk about markets as opposed to actually making money out of markets. This led me to technical analysis, where I studied every book I could find, and then the decision to take the CMT to basically solidify and formalize my knowledge, so I wasn't just being an amateur about it, there was a degree of professionalism about it. I finally quit banking, 2020, moved to Dubai, trade my own capital. I spend my day going through hundreds of charts, researching new ideas, speaking to hedge fund traders, various investors, family office guys, a lot of whom are here, and searching for the next big trade. I've studied lots of different styles of trading, day trading with SMB Capital, scalping NQ futures, equity swing trading, but all of these inform my favorite trade, which is the big position trade. Sorry, what have I done? Which is the big position trade. Finding the right asset as low down in the base that I can stomach and putting on size and riding the trend. This is Robinhood. This is the best chart I have ever seen, in my opinion. Okay? The green arrow is my entry. The green arrow at the top was my trading exit, even though I still hold a lot of the position. And some of the guys here on our family office chat know that I did this trade live for everybody, just to demonstrate what could happen. How could you get more than 100% return out of a stock? Okay? However, we're not here to talk about stocks, and as much as I love equities, this presentation is about the fastest horse, which is crypto. In this cycle is one I've traded right at the coalface, in the trenches, and this presentation is to convey the lived experience of what I have seen, traded, and give you a sense of what it's like inside crypto. So, if I can get a raise of hands, who has ever looked at the Bitcoin chart in depth? Who's really studied it? Okay, keep your hands up if you ever looked at the Ethereum chart in depth. I know Mark Newton now lives Ethereum. Who's looked at the Solana chart in depth? Who's ever looked at the Pepe chart in depth? All right. There's not many hands that went up for any of those, okay? Because do people think crypto is random, or is it actually tradable? Okay, so I'm going to take you on a journey which is way beyond just holding Bitcoin, I'm going to show you the scale, velocity, in some cases the frenzy of big moves that took place, show you the explosive power of meme coins and how I traded them. We're going to look at the darker themes, the Goatsy AI, James Wynn story, and also the infamous Trump coin. We're going to meet the barbarians at the gate. All this time, Wall Street were watching from the sidelines. They had MSTR, IBIT, Ether, and a few Bitcoin miners to play with. But they are now in the arena, armed with a frenzy of digital asset treasuries and IPOs to take a piece of the crypto liquidity. This presentation is going to feel like a tsunami, as it's the lived experience. TradFi markets are a nice 9:30 to 4 p.m. Eastern Standard Time, gives you the weekends off. Crypto is 24/7. It's a fire hose of information. It never closes. It never stops. It's always changing and reacting to new narratives, new metas, new coin launches, geopolitical reactions at the weekend, market maker and whale gains, liquidations and pumps, and the constant hum of the money printer in the background, which fuels the master asset, Bitcoin. Okay, another show of hands. Who thinks that Bitcoin is a scam, who could be a scam or a Ponzi? Okay. Who thinks Bitcoin is actually digital gold? Raise of hands. Who thinks that crypto is going to be the basis of the new financial system? Wow, okay. All right. From the outside, it looks like Bitcoin, Ethereum, and a few other tokens are doing some stuff. They're moving around. They're having some trends. And occasionally you hear about a crazy meme coin. My final slide is going to postulate that the new financial system is being built under everyone's noses amongst all this chaos and speculation. While a lot of people are still wondering whether Bitcoin is a scam, there is a new financial system being built. So every journey starts with the roadmap. Okay, how do we work out where we are? So I'm going to go through these slides quite quickly because I want to get to the interesting stuff, but this will frame things for you. You can verify this on the chart yourself. So I'm going to use a laser pointer. We're going to start here at the peak of the 2013 cycle. Yellow lines are the halvings. Peak to halving is 33 months. Then the halving back to the all-time high was 7 months, and then the all-time high to the top, December 2017 top, was 9 months. Most of you probably remember this top as the first time Bitcoin really made the headlines. A lot of people bought the top, and generally no one in TradFi had ever seen an asset like this. This move may not seem like much because this is a logarithmic chart, but from the halving to the top was a 27x move. Not 27%, it was a 27x move. Okay? Next cycle. 2017 peak to the next halving, 30 months, nearly the same as last time. Halving to the previous all-time high, 7 months. And then the all-time high to the next peak in November was 11 months. Again, halving to peak, 9,700 to 67,000 was 7x. That's 700% move. Okay? You're seeing a pattern here through the cycle. So we apply the same pattern to the current cycle. And I actually drew this out when the cycle was around here, so I didn't know any of this was going to happen. Okay, so how did it play out? 2021 peak to April 2024 halving, 30 months. Halving to the previous all-time high, which was the November 2024 high, 8 months. So if we overlay this, it's about 9 to 11 months from that all-time high to the peak, which is basically the period we're in, September to November 2025. So let's see what happens, okay? The fact that we're having more than one digital asset presentation at the CMT conference is a potential top indicator in itself, but we're yet to see, all right? So, again, there's a lot of, TradFi have their sentiment indicators, flow charts, all these different stuff. This is the crypto sort of flow chart, right? Capital flows from Bitcoin to Ethereum, capital flows from Bitcoin to Ethereum to large cap alts to basically alt season, okay? And these are all different gauges and indicators. Again, I'm not going to spend too much time on this. And these are the ratio charts which help you work out where you are in the journey. At the top is Bitcoin dominance, which is Bitcoin's market cap as a percentage of the full crypto market cap. Down is alt season, which is what everyone is here for, okay? Then you've got, so to try and gauge where you are, Ethereum moves first. So you want to see Ethereum outperform Bitcoin. So this is the ratio chart of Ethereum over Bitcoin. So you can see where Ethereum is outperforming Bitcoin, and we've just had the start of a new outperformance. Then if capital flows from Ethereum to alts, you want to see alts over Ethereum. So this is alts outperforming Ethereum. And you can see that we've been blessed in this cycle with 2 mini alt cycles already, which we're going to go into. Alts are where the astronomical gains are made. That is what everyone in crypto is playing for. Okay, so this gives you an idea. This can be studied, at your own leisure, but this gives you a framework. Okay. So, show of hands. Who actually holds any Bitcoin, either directly or in an ETF? Okay. Keep your hands up if you think this is the most risky thing in your portfolio. Okay, I'll give you a perspective. To a lot of people in crypto, holding Bitcoin is like holding the SPY. Okay, it's the least risky thing they own. For many people versus for many people in TradFi, it's the most risky thing they own. Okay, crypto natives want X's in gains and not percentages. So this gives you a perspective of the mindset of people within crypto. So this is now zoomed in to the Bitcoin chart in this cycle. And we're going to see the game play out. Okay. The main milestones here, I can go over this at the end of how the bear market formed, but the main breakout, and you can see this, the whole world can see this breakout. This was a structural breakout when BlackRock's IBIT was added to the DTCC, which didn't confirm an ETF approval, but made the chances very likely. Okay, when BlackRock wants something done, BlackRock usually gets what they want. This is the actual approval of the ETF. This is the Japan carry trade dump. This is the Fed first cut of 50 basis points, Trump election night, Trump inauguration, Liberation Day, Ethereum breakout. These are some of the milestones that set up the game. However, while this was happening in Bitcoin, everybody in crypto was looking at Solana. Because while you could have done 50% in Bitcoin from here to here, at the same time, Solana did 300%. Sorry, 200% from here. It actually was 300%, sorry. From here to here is 300% move. Okay? Sorry, got this wrong. Looked over this so many times. This was the 300% move in Solana, which was the equivalent of the 50% move in Bitcoin, okay? Now I'm going to take you through how did you know that you're going to be dealt the pocket aces here? Okay, FTX collapse, whole market is in a bear market, obliterated billions, Solana tanked from basically 30 to 10, and it already tanked from like 260 down to 10, which is a 95% down move. It just demonstrates the brutality of a bear market in crypto. So where are we? Okay. Alameda ties, Solana labeled as a dead chain, outages, TVL bleed, people fleeing the chain was all happening down here. This is sort of the start of 2023. Early 2023, Ethereum was shining. They had their merge, but the developers in Solana were making changes. They were fixing the congestion problems. And then a major project, this is a decentralized physical infrastructure project, Helium, migrated to Solana, giving Solana credibility that it might not be as dead as everyone thought. Then there was a state compression which enabled cheap NFT minting. And this was edging and basically indicating to people of Solana's scalability. A major influencer, Ansem, basically wrote an essay on the bull case for Solana along with a tweet that went viral, which was down here. Okay, so you're starting to see again, the base is forming. The game is being set up. We just need the trigger. Okay? The trigger came here. In this period was the Amsterdam Solana Breakpoint conference. It drew more crowds than people thought. They unveiled grants and partnerships to the developer ecosystem. The Fire Dancer validator at demo basically promised huge transactions per second, quelling the uptime critics. Solana jumped 50% during this period. Pits, which is an Oracle, November airdrop distributed 77 million worth of tokens to its Oracle users, and this launched airdrop season. So you're starting to see, look how fast this first move basically happened. If you weren't watching here, you could easily just miss this. The game continued. December was a wealth explosion. Jito, 7th of December, airdropped 100 million tokens valued at 200 million to its stakers. They basically skewed this towards retail rather than high-value wallets, which basically distributed more money among retail clients, which boosted Solana's retail appeal. TVL on Solana, which is the total value locked, was at $1 billion now. Mid-December, Bonk, which was a meme coin, surged to $1 billion market cap. They bundled 30 million coins with the Saga phones, which were instant sellouts, because basically you bought the Saga phone for like $500, but it contained $5,000 worth of Bonk tokens. These were selling like crazy on eBay and other basically trading platforms. The founder came out and gave a viral tweet, Solana for the people. This blended the idea of fun and finance. December 22nd, basically, Solana breaches 100. Reclaiming all the FTX losses and soaring DEX volumes on Orca and Radium, sets us up for 2024's Jupuary, which was basically the hype building for Jupiter Aggregator's airdrop, which was the largest basically on-chain trading DEX on Solana. More airdrops ensued. Tensor for NFT traders dropped 250 million to wallets. MarginFi dropped another 50 million to lenders. Then on the 31st of January, Jupiter DEX unleashed 700 million tokens worth $616 million. This is just free, given away to users. Imagine the liquidity injection into the ecosystem. Basically, there was a huge frenzy of buzz on Twitter. I mean, the whole thing was just crazy at the time. Everyone trying to get more airdrops, trying to anticipate when the next airdrops were going to be. But this was a huge, basically, free money giveaway. Basically, the arc of fortune had completely reversed. Solana's TVL is now 4 billion, and it was now setting up for a huge speculative boom in altcoins. Ansem, the same guy who wrote the bull post down here, became the main character on X. He amplified his wins. All his calls started to get followed. Skeptics were getting converted. The super fast Fire Dancer validator program, which was basically designed by Jump Trading and the prolific Helios Labs, loomed for enterprise scale, promising NASDAQ speeds on Solana. Pith Oracles outsped Chainlink. Jito overpowered governance. Bonk deflated by a burn. Saga bridged Web3 to hardware. And Jupiter basically capped the whole flywheel, heralding crypto's next summer. The cycle had its first major wealth injection for on-chain degens, savvy prop traders, and aggressive crypto hedge funds. They now had house money to play in the most speculative end of the market. A new platform called Pump.Fun made launching means super easy, and thousands were launched over the next weeks, and hundreds of millions were made and lost. So it's all great talking about this, but could you have traded this, right? So up till now, people have shown very big macro charts on everything. The nitty gritty, how could you have traded this? So this is the daily Solana chart. Down in the base, these are all possible entries with your potential risk reward if you were to buy these breakout candles. This is one of the most, in my view, this is one of the most effective ways to trade these types of assets. You look for the volume breakout, you set your stop below the candle, and if you've guessed or anticipated correctly, it never comes back. So you had about 4 or 5 different entries here where you could have entered for the first time or scaled up your position while managing your risk, right? Once this gets going, these things just don't come back. And that is in my view, this is one of the big attractions of crypto, is the ultimate momentum asset, because it just begets more people coming in. Key is catching it low down. Okay? So we're going to go a meme coin. Dog whiff hat. Okay? Nearly ended up on the sphere. Okay? I'm going to pick these stories out, okay? So this was basically someone's profile picture from some esports gaming. Someone then minted it into a meme coin. For some reason, it just resonated on Twitter. There was celebrities, there was everything you could have, imagine, had a hat, right? Every character, everyone had a hat, and it just caught on. Also, it's being pushed by market makers and other big whales as well. So there is sort of flows behind it as well. Okay, it has no utility. It just caught the hype cycle. By January 2024, Coinbase and Binance had both listed it, and the market cap was basically the market cap went past 500 million, which is a testament to the bull market's love for absurd vibes. In March 2024, Ansem came back to the fore and rallied the WIF community to say, we're going to put WIF on the sphere, right? To put something on the sphere for 1 week is $650,000. They raised $650,000 in 4 days. Imagine this. This is random people sending tens of thousands of dollars to an anonymous wallet with no recourse because they're part of the community and they've made so much money on WIF, they want to support these projects, right? Market cap at its peak was $3.5 billion, and it was trading nearly $1 billion a day. Okay? It still hasn't gone on the sphere, but the wallet is still there. Everyone can still see the wallet on the blockchain. So I think by the end of this market, I wouldn't be surprised if you didn't see WIF on the sphere, because the money is there. Okay. How could you, again, let's go back. How could you have traded this, right? I was watching this whole thing, right? So I knew this whole thing was brewing, and the meme just caught on. My entry was down here on this. And it was a nerve-wracking entry because meme coins are volatile. But you can see this is not random. This is accumulation. This is a base. This is a deviation. This is a breakout. This is not random. This is following technical principles and trading principles and candle theory. Yes, it's a bit more aggressive and there's predatory actions, but essentially, it is tradable. There are your 2 entries. Look at this. The move was, you can see here, was 980% from this breakout and 2,200% from that base low. Okay? Right. My favorite trade, as anyone who knows me knows, I'm a bit obsessed about this thing, right? Because there is a potential prophecy that this thing can go to $50 billion because Doge and SHIB both went to $50 billion in the last cycle. But let's see. So, as the cycle's progressing, Ethereum makes its move. And I'm not going to, this was all around the same sort of time. But this move in Ethereum was a 28% move. This strategy is called trading the beta. So instead of trading Ethereum, you trade the high beta version of it. So instead of trading NVIDIA, you trade SMCI. This is the version, this is SMCI on steroids for Ethereum. It's the same trade as Ethereum. The breakout is at the same place. So while Ethereum continues going up, Pepe continues going up. But Pepe went up 650% and ultimately went up 1,200% to the top of that move. This is basically a frog created by Matt Fury as part of the Boys Club. But it's a deep internet meme. It's not a random meme. And this is where internet culture starts to come in. So there is a forum called 4chan, and this was kind of their mascot meme. So when this was first launched, it was launched with about a 10K market cap with 70K in the liquidity pool. It was burned, the contract was burned, so no more coins can be put into circulation. So there is a fixed amount of Pepe. I think it's about 1 billion tokens. And there can't be any more because the contract has been locked. When it launched, there was an immediate 7,000% surge from the 4chan promotion, the 4chan promoters. And there is a guy, I'm going to come back to him later, called James Wynn. He bought $10,000 worth, and he sold for $40 million worth his stake in Pepe near its top. Okay, he gave a prediction on X very early that when the market cap was 4.2 million, he gave a 4.2 billion market cap. This actually topped out at 7.9 billion market cap. It was trading $2.5 billion a day with more than 500,000 holders on wallets, right? So these things are hugely liquid. It's quite shocking how much trading happens. So as an Ethereum beta asset, it rallied 5 to 7x the size of Ethereum. And so the game becomes that every time you think Ethereum's going to rally, you buy Pepe instead of Ethereum. That's what a lot of people play for. Okay? So the legacy of this, a 4chan meme was basically tokenized into a multi-billion-dollar asset. The coin has a CEO and an entire team running it and promoting it. And it's got massive community momentum and huge sort of internet vibes credibility. Okay? How could we have traded it? Okay? This was the initial launch. This was the 4chan move. So you can see this massive hype. What this does, it advertises to the whole world and puts it on the map. Every exchange listed it here. So it was already on Binance. It was already on all the big exchanges, ready for people to trade. There was perps already available. So it was set up. Now a question of how long was the base going to take to play out? Deviation, this move here is 100% in itself, and we haven't even got out of the base. Here, this would have been an entry here. My entries were here, right? And it was literally, once you enter here, if this reverses, you're going to be looking at, a decent loss, but that's the game. You put your stop loss under the candle and hope you are right. And over time and practice, you start to get what is a pair of pocket aces and what is a false breakout. Okay. Hope everyone's fascinated by this stuff. This is literally, I hope I'm getting the experience across as well and just showing you just what happened, right? I'm not going to go into this one too much, right? But the reason I've chosen this one is Mark Andreessen from A16Z interacted with this. This was a rogue AI that someone put on Twitter, which basically had its own philosophy that really caught fire. It has 249,000 followers. The dev minted a coin. It went up 8,000%. And it was a new sort of meta. The AI was promoting itself on Twitter. Okay? And Mark Andreessen basically made a 50K sacrifice into its liquidity pool, and this basically made it shoot up another, I think, 400 or 500%. So you can start to see this is getting the attention of VC communities, big investors, all over the place. There's something very big happening, although most people are confused as to exactly what was happening. And I'm going to come back to this idea of AIs and crypto at the end and give you the link. Okay, so the one you probably did hear of, right, is the infamous Trump coin. Now, some of these moves, like the WIF move happened in 33 days. The Pepe move happened in, I haven't got them up here, but it happened in about 40 days or something. The Trump move happened in 2 days, right? It went up 12,000% in 2 days, right? So this was a couple of days before the inauguration. It was stealth launched while all the good and the great of the crypto community were at the crypto ball in Mar-a-Lago, and they launched this in stealth, and nobody knew what was going on, and it was just a frenzy. And, people were just waking up and literally seeing this happening, dumping all of their other assets and going straight into this. So this actually caused a huge liquidity suck in the industry because it happened over a weekend. So you couldn't get fresh capital in. You had to sell existing bags and basically buy Trump. People did, anywhere you bought it. If you bought it early enough, you're up hundreds of percent. Peak euphoria, crested January the 20th, inauguration day. It got to 80 amongst vows of the crypto golden age, onboarded 200,000 users, spiked Solana stablecoin supply 73%. The dump was swift and brutal. It's down 60% to 29, and then it continues to bleed now. Trading volumes created to $150 million a day. But it gives you an idea of how fast this happened and what a bit of publicity can do. Okay? Now, trading this was extremely difficult. You basically had to close your eyes, buy it, and pray that you weren't too late. All right? And a lot of people sold too early, and a lot of people sold too late because it didn't quite reach the magic 100 number because the Melania coin was launched, and which sucked the liquidity out of this. You can't make this stuff up. If you were to make this stuff up, nobody would believe you. But this is all happening. This all happened. All right? Okay. So we go to. Is Mark Newton here, by the way? Ah, right. Well, Mark Newton's become the Ethereum whisperer, right? He suddenly got 200,000 followers on X out of the blue, and I'll explain why. Okay, so this again was one of my favorite trades, right? It's just a beauty of a trade, right? How did the game set up? Okay, again, when something has a move like this and it starts to bottom, right? It starts to create, vestiges of a bottom. Start to pay attention, like what's happening here. Now, Ethereum has been a dog of the entire cycle. Everyone's literally been complaining that alt season hasn't happened because Ethereum's been a dog. It never even got past its previous all-time highs while Bitcoin was soaring. But down here, there was reforms within the Ethereum Foundation. There were some changes in leadership and a change in approach. But very few people seem to know about this because I think nobody was looking at Ethereum, they just considered it dead. It went down to 1,400, which is a 63% decline from the Trump peak. Something was brewing. They had a Pectra upgrade here on May the 8th, and this was the breakout day. However, the initial move, and I bought it literally on this breakout, again, in size, because I thought this was the breakout. But this move was so powerful. I was thinking to myself, like, what is going on here? This is more than just an upgrade, right? It didn't become clear till later on, until this day, when Joseph Lubin, the co-founder of Ethereum, was launching a digital asset treasury. This is basically the Ethereum version of MSTR. He wanted to become the Michael Saylor of Ethereum. And they were going to be buying hundreds of millions of dollars worth of Ethereum and create income from DeFi and staking. So these DATs were effectively launched from shell companies injecting with capital injected into them. And you can see this is SBET's move on the left-hand side. After the announcement, it soared 213%. But that wasn't all. A few days later, you had the Genesis Act become law, and this was another war incursion that basically took the Ethereum price down, which gave you a gift of a buying opportunity if you had missed this. I added to my position here, and then it started to move back up again. Here, BMNR, which is Tom Lee, came out with, I'm going to be the chairman of the next Ethereum DApp, which was even bigger than SBET. And Tom Lee has a huge audience and a huge following. And with that kind of publicity, you can make things move, right? So also down here, you had the Etherealize Foundation, which is a group set up to market Ethereum's virtues to Wall Street, put out the bull case for Ethereum so people had a narrative to hang their hat on. This is the digital oil thesis, which is a decent thesis, and also consensus put out Ethereum as the trust layer. Now, however much you believe in all this, this is all worth considering, because if Ethereum is going to be the rails of the future financial system, then this is the bull case story. Okay, so Genius Act becomes law on June the 18th. Tom Lee comes out, and you can see what happened. Look at this move. In his stock, you could have bought it the morning of the announcement, and it moved 1,000%. This is Wall Street now getting into the game. Wall Street are in the room, okay? And there's a whole meta around DATs, which you can read about, but basically it is shell companies being set up, raising billions of dollars and basically buying tokens. There's 3 multi-billion Solana DATs that were set up in the last couple of weeks, and there's about 5 or 6 multi-billion dollar Ethereum DATs. There's a WorldCoin DAT. There's a lot of DATs coming, right? And billions of dollars are going into them, right? The numbers are mind-boggling. So, could we have, okay, hang on, where are we? Ethereum. This is the trading, this is the trade. This would have been the ideal entry, but I missed this one. But then this one was the entry. You get an entry like that, and you know that this is potentially going to be a massive trade. And then you can see, again, if you look at this chart, you can see how uniform it is through these moves. But it's really choppy up here because now everybody is in the trade and the market makers are trying to shake everybody out before the next move. Up here is super difficult to trade. Down here, both these legs were relatively easy trades. Even this one was relatively easy. And this is a big gain. You can do this position, you can do this trade in size. This is a 150% move in the space of 3 or 4 months. There's not many places you can get a move like that. Okay? So, where are we now? Yellow circle is James Wynn's season. All right? Now, this is a story you can't make up. Okay? So every cycle spawns new characters who seemingly do crazy things. Like the Ansem was the sol and whiff guy, Murad was the meme coin supercycle guy, Tom Lee was the DAT trade guy. However, in this one, in my opinion, this guy takes the biscuit, James Wynn. We originally saw him that he made $40 million out of Pepe. So he's been knocking around Twitter, harassing meme coin people, saying, I'm going to dump your token, this and that. But then he shows up on Hyperliquid, okay? Shows up on Hyperliquid, which is basically an on-chain version of Binance, right? So you are taking liquid derivative trades on-chain, and the whole world can see your position. Because you're not going through a centralized exchange, it's a decentralized exchange, there's no KYC, you put your capital on there and you do your trading, but everyone can see it because it's a blockchain, and blockchains are transparent. Okay. So essentially what this guy, he announced, I've increased my Bitcoin long position to 135 million. I strongly believe that this is the bottom. If not, we buy more, all-time highs soon. Right? That was here. Look where he is in the chart. Okay? You know how big this guy's position became at the top? 1.2 billion. Right? This is one guy, no hedge fund, no family office, no structure, no KYC, no nothing. And he can, firstly, the market gives him the opportunity to make $40 million in the first place. And now he has the opportunity, through new protocols and technology, to put on a $1 billion position in public, right? With no oversight, no one's approval. Right? Imagine if a hedge fund tried to do this, the nightmare they wouldn't even be allowed to do this. There's one guy managed to do this. This is showing you there is another world on chain, with guys who are not just degen gamblers, guys who are trading massive size. There's another guy called High Stakes Capital who did a huge size, but he was on centralized exchanges, so you couldn't, he wasn't out in the open. But this guy takes the biscuit. He was completely out in the open. The problem was he got liquidated. Okay, he started off. His peak profit, and I've got all the details here, but I'm not going to go through the entire thing. I mean, his whole story. He increased his exposure. He basically then was $1.2 billion long here. Trump announced 50% tariffs on the EU. And he then he took a big loss, flipped his position to short, and he got stopped out here on his short. So he flipped from $1 billion long, so $1.2 billion long, to $835 million short, and he got stopped out on that as well. He ended up basically bleeding from an original base of 3 to 4 million. His peak profit was basically 87 million. He got out at 25 million, and later on, he ended up losing a lot of that as well. This is a cautionary tale. You start with 10 grand, you make 40 million, you run it up to 100 million, you don't sell, Trump announcement shellacks you, you're trading at the wrong part of the cycle, and you end up, just whittling a lot of it away. It's a cautionary tale, but his story is worth noting because of the size he was able to do. This highlights, obviously, the danger of leverage. He was trading, you can see his positions here. He was trading with 40x leverage. That was his size. This is the position value. This was all out in the open. That was his P&L at the time. This is liquidation price. You can see it all, right? 40x leverage means the position moves against you by 2.5%, your collateral is wiped out. So your timing is going to be really good. The problem is that the market makers a lot of market commentators think that James Wynne was intentionally liquidated by the market makers, as large positions tend to get hunted in the market. This happens in TradFi as well. It's just that hyperliquid adds a new dimension because everyone can see your position. So there is a lot of this predatory activity in crypto, and this is one of the dangers of high leverage trading, is that the liquidations occur as high leverage traders get taken out by market makers, right? But this goes with the territory, and that's why it's almost in crypto, one of the best strategies to use is actually to buy the nukings versus the breakouts, especially when you're perp trading, which is leverage trading, okay? So you can see, this was some of his comments, you know, you got a feel for the guy, you know, from his interviews. He's a guy from Northern England, from a deprived part of the UK, no formal finance training, nothing, and he was able to do this, all right? It really makes you think. Okay, sorry? No, no one lent it to him. It's his money. He made it from Pepe. The Pepe trade at the start, he turned 10 grand into 40 million. So he had the capital. It does, well, yeah. So you post your collateral, you take your 40x leverage, and if your position goes below your stop, basically below your liquidation point, the market makers liquidate you, and they take your capital. Hyperliquid. They're not really lending it to him, right? They are putting a notional position on, and they're using your, it's like trading futures on leverage, right? The exchanges basically put the notional position on, they use the collateral basically to protect the position and protect themselves, and if you get liquidated, they take your collateral. All right, sorry, how much time? Oh God, okay. All right, fine. I'm gonna go to the very last slide, which is, this one, okay. So, what is this all about, a new financial system, okay? Scott Bessent, bets on stable coins to bolster demands on treasuries, right? Tokenized stocks by Robinhood, linear collaboration with Swift, World Economic Forum, how will asset tokenization transform the future of finance? Google stablecoin payments, DeFi. I'll frame it for you, okay? How could this happen? First, you have the US Treasury Secretary pushing for adoption of US dollar stablecoins globally. Basically, stablecoins provide buyers of US treasuries, which the US government needs. Passing of the Genius Act gives the regulatory framework. They need buyers for US treasuries and stablecoins are the prime candidate. How does the distribution happen? Very likely, you'll start seeing stablecoin wallets on WhatsApp or X soon, and people use these applications globally. They'll be able to pay each other directly instead of going through a bank, especially in a foreign country where FX and banking is restricted. Now, say if you're a person in a third world country who's been doing work for a US client and you're being paid in US dollar stablecoins, how long before you figure out that you can buy other types of assets with your stablecoins, including tokenized US stocks like Nvidia or Meta, which are being tokenized on-chain by a lot of people? You would never have been able to open an actual US trading account, but now you can buy these assets on-chain, okay? How long before you discover that you can post these assets on collateral on platforms like Aave? And then you can borrow against them. Borrowing against your assets is something that only people with private banking accounts can currently do. Now you can have $100 of an asset and you can borrow against it. You tell me that this doesn't revolutionize finance for a lot of people with lack of banking facilities. The possibilities are mind-boggling, the infrastructure being built and the regulations becoming clear. Let's go to AI and crypto. What happens? Okay, what happens when machines start transacting with each other? What are they going to transact over? They're not going to use Visa and MasterCard. They're going to use crypto. So you see, in all the chaos, fraud, and speculation, my opinion, what we're seeing is the birth of the new financial system. Okay? All right. All right.
We got to do the exact same session again. We're building an hour. Right. Ladies and gentlemen, Shukesh Pabari, who is now going to moderate our final panel in about 30 minutes. Stay right where you are. We'll have you right back out on stage.
Cool. I just want to give one more shout out. I have a friend here, Matteo Jamar, has kindly joined us. He's an original Bitcoin OG and runs 2 very successful Bitcoin funds. So anyone wants to grab him and have a chat, please do so.
Right here. Thank you so much.
All right.
Awesome.
Thanks, Tyler.